Hi everyone, it's Lan from Success Accounting Group. Thanks for tuning in another episode of Facebook Live. And so before we start, how's everyone's tax planning going? Have you started the tax planning or you're already completed? You've seen your accountant? I know a lot of our clients already have done detailed tax planning, and they've saved, our top one last week was $94,000 tax saved for our real estate client. They're very happy with that, and so we're doing that tax campaign to save $500,000 before 30 June for our clients. And if you need help or you would like a second opinion, please get in touch with the team. Alright, enough said about that. So I'm going to cover today last chance for big super contributions. Now, you may not know that there are changes in the amount of super contributions from 1 July. Because after 1 July, the amount of super that you can contribute into your retail super as or your self-managed super fund will be vastly reduced. So the decision to do this is now, before 30 June, so that you can maximize the amount of your super balance growing for you. Now there is two possible methods to do this. There's the non-tax deductible contribution and the tax deductible contribution. Today I'm going to explain more on these two methods in a general basis, and if you'd like to have a more specific advice, you need to come and see us. So first, what is the non-tax deductible contribution? So the non-tax deductible contribution threshold at the moment is the $180,000 per year, okay, and $540,000 or $540,000 in the lump sum for 3 years. Yeah, that's a lump sum. Unfortunately, this will change. So this is non-deductible. Non-deduct. This will change after 1 July. It will reduce down to $100,000 per year and $300,000 lump sum. So if your strategy is to grow your super balance, then obviously this is more benefit for you. So if you wanted to increase your super balance, then you try to put a lump sum in before 1 July so that after 1 July 2017, the ability to do that has vastly reduced. If you were thinking of, for example, buying a property in a self-managed super fund and you need money for a deposit, you obviously want to get it in for 1 July because it caps at $100 per year per person, so it may not be enough. Yeah. So that's the non-deductible one. The deductible one are the deductible is the $30,000 one. At the moment, for people under 49 and less, it's actually $30,000 at the moment, which is deductible. So what this means is you can pay salary sacrifice in $30,000 into your via your business, and you can deduct that. And the other one is if you're over 50, then you can do $35,000 each year per person. After 1 July, that goes down to $25,000, and here is $30,000. So the thresholds of contributing super again is reducing after 1 July 2017. Okay, so there you go. So you can see the thresholds of super tightening after 1 July, because the benefit of super is, as you know, the tax rate on revenue and income is capped at 15%, whereas a normal company tax rate is 28.5%, as we covered last week on business structures. So therefore, there's in a super environment, it's very tax effective in investing in shares or property or whatever that suits your goals. But to get it into super, there's a limit, or there's a cutoff from 1 July. The thresholds are going down. So I hope that has inspired you to review your super strategy. And of course, if you need any help, then get in touch with myself or one of my team members. We're more happy than to help you. Now, just for those who run a business and you need to pay super for your staff, if you want to bring forward the super payments for your staff and pay that instead of when it's due, which is 28th of July, pay that before 30 June, because that ensures that you can also claim the deductions for your super of the staff. So that's an extra bring forward deduction for you for your business. So yeah, so I just wanted to cover that and point out that the threshold changes from 1 July, which is only 4 weeks time. And certainly if you're looking to boost your super quickly, then the non-deductible way is the way to go, which is $180 per year per person. If you run a business, then you can go up to 30K if you're under 49 and 35K if you're over 50. So that's all I have today. And again, thanks for joining us, and we look forward to seeing you next time. Bye for now.